The SBA 7A program was set up by the feds to ensure small business owners had access to affordable capital to start, buy, and expand their business. And it was a means to maintain and create more jobs. Great, small business owners must be thinking. My business needs capital, so I'll just go mosey on down to the bank and get me an SBA loan. Not so fast. Even with the SBA guarantee, banks will still find a way to say no a lot more than they say yes. Hey, I'm Ray Drew, an actual SBA lender, and in this video, I'm going to share the top 10 most common reasons a bank will turn down your SBA loan request. The first thing you should know is that just because a bank says no to your loan request doesn't mean that they all will. Each SBA lender has their own lending appetite. SBA 7A loans are not cookie cutter. Each participating bank designs their own credit box and they lend their own money. And they aren't gonna let that money out the door unless you fit their parameters. And some have very stringent parameters, even with the SBA guarantee behind them. But again, that's not all banks. Some lend more in what we call the spirit of the program. I've closed SBA loans for small business owners who've had 5 banks tell them no. Don't give up. Well, some of you should give up. Look, not everyone's going to be qualified today, but the point of this video is to help you get there, because the truth is, the SBA 7A loan can help facilitate more growth in your business than ever thought possible, whether it's through expansion capital, or buying out a competitor, or purchasing a building. The 7A provides flexible financing to help get your business to the next level. All right, so here we go, the top 10 reasons SBA lenders say no. Number 1, eligibility. Eligibility is at the foundation of SBA lending. The SBA has some pretty black and white rules about what's eligible and what's not. They also have some gray rules, but that's another video. For example, the SBA has a section in their SOP called ineligible businesses. Some examples of businesses that are not eligible for SBA lending include strip clubs, casinos, churches, anything with cannabis. Certain franchises are not eligible, like 7-Eleven. Investment properties not eligible. That includes mobile home parks, student housing, the list goes on. If you aren't sure if your business is eligible, drop it in the comments and I'll let you know. Number 2, cash flow. In SBA lending, cash flow is king. This really gets down to the crux of SBA lending. Debt service coverage ratio, or DSCR. And to calculate it, you take your total cash flow and divide it by the total debt. And to do this, we're looking at the tax returns. So the SBA's minimum is 1.15. That basically means for every dollar of debt, the business generates $1.15 of cash flow to cover it. And that's just the bare minimum. Each bank's gonna set their own requirements. But the big takeaway here is the more profit you show in your tax returns, the more debt you'll qualify for. I know, it goes against everything you believe in, but I'm telling you, pay those taxes. Personal credit, the SBA does not have a minimum credit score. Rather, they require you to have good character. And credit history is one of the main ways to assess a borrower's character. So if you have a history of not paying your bills on time, that is a character issue, and SBA lenders are not going to want to do business with you. By the way, that doesn't mean you have to have immaculate credit. SBA lenders recognize that sometimes things come up, like a medical emergency, your spouse gets laid off, a recession. Isolated incidents like these are a different story. The one thing that will disqualify you though is if you've ever defaulted on a federal government loan, like an FHA loan or a student loan, for example. The government never forgets. Number 4, startups. Startups are tough. They are thought of as the riskiest type of project to finance with an SBA loan, since new businesses fail at such high rates. That's why SBA lenders are more selective when financing a startup. Here are the things that SBA lenders want to see on a startup loan. First of all, if it's an established franchise, your chances of success will be much higher. But if it's a brand new franchise or an independent startup, the lender is going to want to see you have direct industry experience, outside income to serve as a secondary source of repayment in case the business doesn't quite pan out, collateral, and a lot of liquidity. Enough to put in a decent size equity injection, anywhere from 10 to 25% of the project, plus have some cash left over for reserves. You will likely get some doors slammed in your face for being a startup, but if you have 3 of the 4 things I just mentioned, they won't slam it as hard. Number 5, collateral. Most SBA lenders have collateral requirements, even though they are technically not supposed to decline a loan based on collateral. At least that's not what the SBA wants. That said, it happens. This would be the least of my concerns though, because if your only issue is that you don't have any collateral, there are still lenders that are more cash flow focused that will want to work with you. And I'm one of them. Number 6, deal size. Believe it or not, the smaller the loan, the harder it is to get done. Loan size is another reason a bank may say no. Most SBA lenders lend $350,000 and up because of the amount of work that it takes to underwrite and close an SBA loan. Number 7, experience. And this is mainly relevant on business acquisitions and startups since you're not already running the business. So if you're buying a business, a bank might decline you because you don't have direct industry experience. I'm not saying that's right, I'm just the messenger. Number 8, industry. Some banks just straight up won't lend into certain industries. Restaurants, hotels, I'm talking to you. Number 9, cash. You need to have money in order for an SBA lender to want to lend you money. Of course that doesn't make sense. Now, I'm not saying you have to be Daddy Warbucks over here, but some projects require an equity injection, so you need that. And in all instances, you're gonna need some level of post-close liquidity, some cash reserves. Now, finally, number 10 on my list is presentation. I know it may sound silly, but it's true. If you don't have your loan request ironed out and you don't look organized, it can actually hinder your chances of approval. Take your time to get organized and present your loan request in an orderly fashion for the highest chances of success. There you have it, the top 10 reasons the bank will say no to your SBA loan request. Not saying they're all good reasons, banks do dumb stuff all the time. I'm curious, what's the dumbest reason a bank has said no to you? Leave it in the comments. So there you have it. If you found that video helpful and you want more insider tips from an actual SBA lender, I would invite you to click that subscribe button because I've got plenty more where that came from.